Good evening, everyone. Welcome to Banao Bharat's Trading for Living Wednesday Bank Nifty Expiry Live Session. Had to take about 20 days of break for various reasons. The last video that we did was on 9th of October, and starting today, hopefully, we should be more regular in our video sessions. Hope October was good. It was quite a challenging month for trend following systems. We had a large many days of stopouts and few days of good trend emerging, but we did not get good entry points, so we had to sit and wait and watch those trending days also. Not a very successful month, but then generally any given month we don't go through big drawdowns, mainly because we play with very tight stop losses, and in trend following system the general characteristics of this methodology is it gives many losses during the choppy phase and catches the trend when the trend emerges. But on an intraday basis, even catching a trend is sometimes a challenge because of gap ups and gap downs, but then that is how we have to deal with it. Even on a 20-day monthly cycle, even if you get 4 very good trending days is more than sufficient, and remaining 15 to 16 days, even if you have break even or few days of losses and few days of gains, in fact even one good day in a week is more than enough for us to see some decent returns through this trend following system. Well, if you have any comment on your October trades, do write back to us. We will look into them and see if some learning is there as part of that. November series has started. We are already 4th day into the November series, and markets from the lows of around 18,000, better we see the daily chart. From 18,000, let me go to the Nifty futures. From 18,840, on 18,840 we did a good pullback, went up to 19,279, and from there on we are once again back close to 19,000 levels. 2 days of fall, yesterday and today. Yesterday was a Fin Nifty expiry and today Bank Nifty expiry. Markets are anticipating some kind of announcements from FOMC, so post that probably the trend might become more clearer. But on the intraday time frame, trend was kind of clear since yesterday itself. It opens gap up high, and the very first candle was a very big red candle and the biggest red candle for the day, which was an indication that we might be heading little more on the south. So today opening we had a kind of a trade which was more on the short side, so we got an entry at around 19,032, and by the end of the day it had made a low of 18,973. briefly, this is on the spot chart, briefly it had gone below 19,000, made a low of 18,973 and closed at 18,991, again below 19,000. Bank Nifty also kind of in the downtrend today, but because of the expiry and because of Fed's interest rate announcements, it was kind of sideways, but still gave certain down candles, wherein if we were quick enough, then we would have at least exited break even. The short call was around 42,665. From there on, made a low of 42,589. Not much for a banking index. We expected about 200 to 300 points of fall, but that did not happen. For the large part of the day, the banking index was hovering around the day's low or our sell point, but it was not taking a clear sell signal. So that was how the whole thing played out today. I'm just checking how the I'm just checking something on the camera. 1 second. I want to see the live. Yeah. So I was just checking, when I mute the video, how does it look on the screen? Yeah. Okay. Fine. So this was with respect to both Nifty and Bank Nifty. Bank Nifty has gone into the first November series expiry today, closing at around 42,736. Well, Bank Nifty has been fairly weak in this last couple of months. In fact, since September itself, there was a pronounced weakness in the banking sector. Lot of headwinds were there with respect to HDFC Bank's merger with HDFC, or HDFC's merger with HDFC Bank. After that, the first HDFC Bank quarterly result was announced. The result was fairly good, but still market did not respond well, and HDFC Bank has been dragging the overall banking index. You can see here we saw the highs of 1759, that was in the month of July. After that, August, September and October. For last 3 months, it has been on a very clear downtrend. Recently, it has made a low of 1459 and currently trading at 1482. Let us also see Reliance, which again was a laggard for a long time. From the highs of 2858 has come all the way down to 2217, currently trading at 2302. In fact, Infosys made a high of 1525 in the month of September, currently towards the low, made a recent low of 1350, tried to make a pullback looks like is not so very convincing. 1390 is a level which can give some upward movement, but you can see here 1390 was made 3 days back, and all 3 days, the subsequent 3 days were all red candles, and looks like 1390 is acting as a resistance and it may not cross 1390 in a hurry. So probably we are going below 1350 now once again in Infosys. Bank Nifty also made a low of 42,105 recently, and from there on made a good pullback up to 43,356 on the spot, and currently today closed at 42,736. So this is with respect to the Bank Nifty. And on the Nifty daily chart, made a high of 20,222 on the spot somewhere in September, and from there on pronounced weakness was visible, and you can see here many red candles and few green candles post September 15th. September 15th was the yearly high 20,222.45, and from there on up to the lows of 18,837 recently in the month of October on 26th of October, and from there on 3 days of pullback, but third day it was kind of a topping out pattern with a good red candle, not an engulfing candle at the top, but it's a good red candle, gaps up, does not sustain even for 1 minute on at that level. 9:15 onwards yesterday morning it was continuously down, and that downtrend which started yesterday on the shorter time frame has continued even today, and even today it has closed in the red and also has formed a decent red candle, which is an indication that yes, we are kind of in a pronounced downtrend. And even in the month of November, in spite of Diwali Muhurat trading, I am expecting for this month probably markets will further go down, and until where I would say, like at least it would give a 10% correction from the top. So the 10% correction from the top would mean from the highs of 20,200, the 10% means like 2,200 points, which means the target of around 18,200. We are still today at 19,000, but we are discussing a target of 18,200 for coming 2 months. See, technical charts work based on US calendar times, not based on our financial year or not based on the Samvat time period. I have discussed in some of my earlier videos also. Based on that, if you see, like from the top for the year 2023, if we have to call it a top for the series of last 2-3 years, then at least it might have to correct below 10%, otherwise the ongoing uptrend will be held on a yearly basis. So my guess is this time it has come up to 18,837 and it did try to do a pullback. From there on again for last 2 days it has started falling, and probably in the coming 2 months we are headed towards 18,200. So that is what is my take on this. If we don't even see 10% correction from the top, then we cannot call it a top for the calendar year. So based on that, since it has already started coming down and it has already established the top, probably for the calendar year we are headed little bit more on the downside. So that is what is my take, but we all know how the market functions. It doesn't listen to us. We have to react to whatever market does. So probably tomorrow or day after, if there is a pullback once again, if market shifts, then we don't hesitate to change our mind. This is what we are talking of is on the yearly basis, but our primary focus will be on a shorter time frame, on intraday, on ET and ET, which is enter today and exit tomorrow for a very short duration, just carry the overnight position. Or we also check the data on the swing time frame, which is for about 3 to 5 days, and the settlement time frame is generally on the indices. For Nifty it is from Friday to Thursday, and for Bank Nifty it is from Thursday to Wednesday. So this is the settlement cycle that we watch on indices. On the stocks, we generally prefer to do the swing based on 1 week's chart from Monday to Friday. So that is what the model that we have adopted. There is no right or wrong in this. Whatever is convenient or comfortable or what we have got used to for quite some time is what we prefer to stick on to, because we have found some kind of positive alpha by sticking to our methods, and we don't want to disturb that methods or try to experiment too much. When something is going good, try to make the maximum use of it by fine tuning the same methods and not changing the method, and also getting proficiency in that method itself. You as a learner, you as a trader, if you want to be a serious trader, you need to also keep in mind whatever is working for you, continue to work on that, improvise the same thing and become more proficient, more in your execution, bring in that fineness. So once you can do that, then there is no stopping you from making big bucks. Until then, trade small, trade with some kind of a working methodology wherein your losses are contained. Don't look for too much of profits, but at least work on methods that can restrict the losses. If you are in the game, you will be again back in the game tomorrow morning. Do not go for big losses, which will from which you have to cut down on your positions largely. To begin with, start small, and to begin with, keep your losses exceedingly small as much as possible. Once you get the confidence, once you start making money, once your account is in green, once the equity curve starts moving higher, that is when you will have to increase your position size also. Until then, keep a low profile, keep it going, be in the game, keep practicing, keep checking what's happening, what is happening. So once you get a hang of it, then it won't take much time to push the accelerator to increase the lot size. But we need to get that confidence not based on our methods but based on our P&L. No matter how good our methods are, if your P&L is in red, just contain yourself by being restricted with your approach. Let the P&L come into the green for the month or for the quarter or for the year, then you can think of always increasing the lot sizes. And if you want to really be a trader, don't hesitate to be in intraday segment. Without being in intraday segment, you cannot think of being a good trader. So that is what is my take is, keep your positions less if required, if you can't handle the heat, but you should know what kind of situations emerge on an intraday basis. See, whatever happens in the market happens in all time frames. Whatever has happened today has happened before, which means, like, on an intraday basis we get lot more exposure towards the trading activities compared to the longer time frame. I am not against longer time frame, just that if you want to be a good trader, or if you are in the learning phase, then you need lot of exposure towards what all a market can do on any given day. This is what it will do on any given time frame, maybe on a week, on a month, or on a year. In a day market, sometimes, like, it just keeps going up, and all day it is higher. Sometimes it is like, all day it is down. Sometimes it opens lower, goes up, but completely collapses by end of the day. So many situations come on a daily basis. Each day is a challenge. So if you can, like, somehow start observing these kind of patterns and start observing or trying to handle these kind of patterns, at least when you have seen some kind of a pattern, you can post 3:30, you can sit and analyze probably what I should have been doing. So the next time when such situation comes, you will be better prepared. For me, no day is a new day, because whatever any given day, it has already has happened before. Somewhere in the last couple of years I would have encountered that, and I have a records of all the transactions, which gives me lot of, like, confidence and lot of comfort during the market hours. I do not panic, I do not, like, wonder what to do. When I don't know what to do, then the best thing is, like, just cut the positions. So these are the things, some of the things which you have to keep in mind if you want to become a serious trader. I am very soon starting something called as market town hall, so you can be part of that. It will be like, I will give you access pass for the live sessions. People can come and sit in the live sessions for a few days, see how I do the trading, understand my thought process. It won't be like a classroom session where, like, we discuss on a particular topic. It won't be like that. You can ask me anything and I would be glad to answer them if I know anything about those things. Well, having said that, let us conclude today's session. A good day for Nifty, and not so good day, but still not a bad day for Bank Nifty. Tomorrow, the 1st November expiry for Nifty, and tomorrow morning we'll be waking up with the news of Fed's rate decision. Let us see and take how the market reacts. But we will be starting the day with a downtrend. So when we are in a downtrend, the thing is, we need to be prepared for more of a short trade than a long trade. So look out for two types of trades. One is breakout on the short side, the other one is pullback on the short side. Only the third type, which is less likely in my opinion for tomorrow, is the upward reversal, for which the levels are little far off. So until we don't see the upward reversals, until the trend is down, we would prefer to trade on the short side until unless the data points to something else. So let us see how tomorrow pans out. Let us once again meet, and probably this month we will try to meet during the morning sessions, and we'll also start off the market town halls wherein people can come and sit and ask for any of the doubts that they have on market dynamics. Well, see you all once again tomorrow. Until then, Om Swasti.